Dissector, you are an idiot.
You are retarded.
Yeah. And now,
Physical or mental?
I just exploded.
Ryan, why don't you pull up Amazon's margins real quick?
Well, yeah, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when you said that.
Wow, physical philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Hello, everybody. It's Saturday. It's not 8 p.m. Eastern. It is 9 p.m. Eastern. A bit of a delay, an offset, a offsides, a neutral zone infraction, one could say.
Yep.
But that's not a problem. And I actually, Fiscal, do you like the 9 p.m. starts better? I know we say anything can happen past 9 p.m. But do you like the 9 p.m.s or 8 p.m.s? What do you prefer?
So, honestly, I think sometimes the 9 p.m.s seem to go over better for some reason. It's after hours. You can, many things can happen at 9 p.m. that don't even happen at 8 p.m., for example.
We do say that often.
We do. I'm seeing the backstage action right now.
Aria is having a blast at this function.
There's some
right now.
casting couch shenanigans back there right now.
Anything happens, and that's for members only to view.
Yeah, for sure.
But Fiscal, what are some of the things you could be doing right now? Saturday, 9 p.m. Eastern. So that's like double the risk. It's hot. It's Christmas weekend. People are out right now.
You could say it's double the pleasure and double the fun.
I know. Yeah, it's bad stuff. What could some people be doing right now, Fiscal?
They could be. Have you ever seen that movie, The Hangover?
Oh, I have.
They could be doing all of those things.
Ooh.
Literally all of them. Getting regrettable face tattoos, right? They could be starting fights with Mike Tyson.
Regrettable dentistry practices.
They could be getting blackout drunk. Blacked out drunk.
Bearish.
Yes, very bearish. They could be, going to the strip club, snorting some stuff that looks remarkably like sugar. I don't know what it could be.
Maybe it's Christmas. It's
Christmas
season.
It's literally
snow outside.
What a Christmas miracle! It gets
Except
them.
You're not taking in H2O.
They're flying higher than Santa's sleigh on that snow.
Yeah,
Christmas spirit.
Not good things. You could be having crash outs on the streets of New York City right now. You could be for every like this video you get, and you could be pouching a Zen up in the top of your lip. It's not bullish things.
As Blake says, they could be going all in on a single micro cap.
Guilty, not guilty. We do have Echoes in here, and Echoes has been very busy covering some of the most pressing lines in the news these days.
Yeah,
obviously the Haktua girl. But Echoes is a smart man. He recently shared his returns. He's up 180. He's like up 80% this year.
Yeah,
and that's only because
it's like Fabio numbers right there.
Those are Fabio numbers right there, and that's only because Echoes did have temporary access to becoming a channel member because he won it as a giveaway, which is only $2 a month. For $2 a month, it's the best money you could possibly spend. We don't share like our 5 stocks to buy Twitter threads that are unlocked, unfortunately. So you're gonna have to go to some other pages for that. That's not us.
and not to be bury the lead or whatever, but Uber is now on my radar as well. Given the recent pullback and given the fact that I'm already invested in their Asian cousin Grab.
What are you talking about? We had a recession this week. Recession
of course.
And then
it
didn't.
Stocks went down like 3%. Therefore, it's a recession.
Yeah, and I'm not even joking. The day that everything was down, I was hesitant because I did some heavy buying, mainly just indexing, but I did buy some stuff. I'm like, this is just gonna go up tomorrow. I already know it is, and it was free money, quite literally free money. So we did some buying. I'll share some of those definitely throughout the show. But yeah, become a channel member. You'd be a wise man to do it. I think with all that out of the way, is none other more appropriate to invite Aria in. And Aria is obviously well known for his 3 stocks to buy videos, which have recently done him very well. Aria with a new facial hair look, new me, new Aria, new year, new Aria. What's this?
Absolutely.
The one thing I would say to what Echoes has just said in chat is that, and I think Blake would agree on this, at least for High Tide, that I don't think the ship has completely left. The train has not yet completely left the station. I think there is still a lot of ways to go. Like they are just starting to catch on, and
to put it in
the financials are just starting to show the profitability.
I was up at one point like 60% Echoes, and I bought more this week. So if that puts it in context.
Yeah, I would say like, hey, just because it's up a lot doesn't mean that it's done yet, right? Yeah. So, but the stock of tonight's show,
VICI Properties, obviously. No.
No,
dude, I was disgusted. I was disgusted when you sent me that. I knew it would happen, but
it was about time.
Yeah, Aria broke the news to me, and this is Cashflow Kings exclusive, that Joseph Carlson sold his infamous holding VICI Properties recently. That's we did have a bet ongoing in the Discord of whether he'd do it before the end of the year. So anybody who betted the over, you get a free Cashflow Kings channel membership on me.
Oh, there you go.
Okay, so I'm just looking at Uber's financials a little bit so that they're fresh in my mind for this conversation.
Fiscal, don't worry about it. I'm gonna share the screen here in a little bit.
We're
gonna go through everything.
Yeah, I'm ready to be. I'm ready to be sold.
I came with notes.
Oh,
okay, that's good because I'm already. I think I've already got like one foot in, like one toe already kind of dipped in the water as far as possibly buying this. So get me the rest of the way there.
Yeah, I'm expecting to be sold tonight. I intentionally did not buy this just to be sold tonight
because I've stayed away, got there, but I did get their Asian cousin, which means I like their business model. So I'm not the hardest audience possible. So
it's a bigger sell on Ryan here. He hasn't bought an individual holding since God knows when.
That's fair.
Amazon probably.
Yeah, it's true. New one.
Just one quick thing. If you hear music or noises in the background, I apologize in advance. There's a high likelihood somebody even walks by the office and all that type of stuff. But anyways, I digress here. So any like upfront questions that you guys might have about Uber, or maybe how about this? How about we get some of your general thoughts on like the whole Uber situation, that type of stuff, what you guys kind of think of what's been going on there.
All right. My general idea with Uber has basically for maybe the last we'll say this year so far to date. Because obviously I looked at them a little bit when I was deciding what I was going to do with Grab, because they're the closest thing to a peer that each other has. Basically, I think Lyft is a joke. So when I was looking at Grab's numbers, I was kind of comparing them to Uber as the kind of like sort of main name brand sort of version of what they are. And the thing I found when I was looking at both of them is that I like the core business model of ride share and food delivery, right? Love that. But Grab, their like kind of second business that they're doing is online banking, versus Uber's kind of side business is the freight business, which doesn't have the synergies that they would have liked and is, I think, possibly a value destroyer overall. If you look at what they've put into it and the fact that it doesn't produce even in good freight markets, and I think they just don't know what to do with it at this point. But I'm ready to be brought up to speed if that is not the case.
All right. So if I'm right now, basically big part of the thesis, I don't believe in robo-taxi. I think Elon Musk, his mind and potentially his mouth is in one place is when then, if you know what I mean with Trump recently, he's, I don't know. I don't think Waymo is going to do anything. Robo-taxi is proven. I don't think that's going to do anything. So I think a big part of the thesis right now is that Uber is severely undervalued because of the market assuming that that's going to take over. And then like the actual business, I still got to do a ton of research on, but I know that they have a really strong brand. I think they have a moat over the rideshare in the United States, at least. Call me an Uber or whatever, kind of analogy you want to use.
Yeah, I mean, kind of nailed it there. They got the verb moat going and all that type of stuff. We'll get into the robo-taxi stuff. So
I have some thoughts on the robo-taxi thing too. They're not exactly the same as Ryan's. But I don't view robo-taxis as necessarily a big threat to Uber anytime soon. In fact, Uber themselves developed and was testing robo-taxis here where I live, and I rode in one at one point. So like, it's not as though they couldn't compete in that arena if that becomes the new thing. So and as far as I know, there's in some markets an option through the Uber app to order a Waymo robo-taxi. So it's like
in all markets, actually. It's only Arizona, San Francisco, and both of them, if you want to, or you have the Waymo app as an option, but you can also do it through the Uber app at the moment.
Yeah. So, unless I don't think that I don't see that optionality going away, because for Waymo, that's multiple ways to sell, and ultimately, like, hey, if a Waymo isn't available in nearby, you can still get like a human driver, right? So why would you go anywhere but the Uber app?
Yeah, Ari, you forgot to mention here, you also have to become a channel member to ask these questions. You need to pay us $2 every single month for us to, even our guests as well. We need to, gouge the viewers as much as possible.
But I think ultimately, my only drag on them has to do more with their freight business than the robo-taxi thing. But if the freight business at least isn't hemorrhaging, then the core business by itself probably justifies what they trade for at the moment.
All right. So question for either one of you.
Sure.
I'm not completely I don't completely understand what the freight business is. I haven't done a ton of due diligence there.
Let's hit that first, sure. I guess. I'm just gonna share. Can you guys see Finchat?
Yeah.
Okay, so I've
not sponsored yet.
Yeah, I mean, if you want to use my link and honestly,
the affiliate link has been a constant theme on the channel. It's free to plug.
Yeah, let's see. Okay, first things first. So the freight revenue, essentially similar to what you kind of think of like the actual Uber app, where it connects you, the consumer, to the driver. Similar sort of thing, and maybe Fiscal if you want to pitch in here. But essentially, it just connects someone who wants to move goods to the actual like trucking or the trucker or the trucking company.
It's a brokerage. It's a brokerage essentially, though they do more like 3PL type stuff now as well, because they bought out another 3PL called Transplace and merged that into their operations. And they handle a lot of like the shipping and receiving and scheduling for like warehouses and stuff as well now through the Transplace acquisition that they made. Which I know because I actually work with these people, like from a distance, different company, but I'm contacting them and they're contacting me very regularly.
There you go. So you might notice, I think the acquisition happened in one of these 2 quarters. Just a shot in the dark here. I think Fiscal, what do you think?
Possibly.
But if you want to look at, this is specifically the freight revenue, they've done 1.3 billion, and you want to stack that up against the total revenues that were generated. This is on a quarterly basis, by the way. You could see that, like, realistically, it makes up, I don't know, about 10% of it there. Actually, we could check this on.
Yeah, it's not a
roughly 11% of total revenues. So from a high of making up a quarter of the revenue down to 11%, and then it's not glamorous growth rate on this either. If anything, I think it's been declining.
Yeah.
If I remember correctly, been declining for a number of quarters, 1% growth. Like it's the ugly part of the business.
Yes.
Right?
Yep.
Yeah.
It certainly is.
Okay. With that being said, I made notes for you guys, which
All right.
I'm
Wow.
not usually the type of person to come into. I just kind of wing everything. And granted, this is bullet points, but anyways, I kind of wanted to do this as let's touch on the moat, because I think there's a lot of people convinced like, oh, Uber, it's a verb moat. Yeah, they got network effects of both supply side drivers. They got the consumers on the other side. Like it is a network effect at the end of the day. But like, is it really that special of a business? So I kind of wanted to go through that and like, hit everything like, and just like very basic first principles. How difficult would it be for you to come up with a competitor to Uber in today's market, right? Just through first principles, what would you have to achieve to take market share away from Uber, regardless of whether or not you're a robotaxi business or you're literally doing the exact same business model?
Yeah.
Just
I can tell you that I actually personally met an entrepreneur who tried and failed to compete with Uber. And this was somebody that was very successful and built a 9-figure business at one point.
Hi, Lopez over here.
No. This person actually really did build a 9-figure business.
that was Calvin.
But yeah, no. And because Uber got banned in Austin for a period of time, and so they tried to launch a different rideshare app starting there because it was like, low hanging fruit, but it didn't end up working out. So it's very difficult, we'll just say. Yeah.
Anyways, we'll touch on that as we go on here. Second thing, which I think realistically this makes sense in the timeline. I want to go over the fundamentals, and I've said this in repeated videos over and over again. I think there's a large portion of the investment community that have kind of known of Uber as this like cash losing business that's crazy amount of stock-based compensation, negative 20% EBIT margins, all this crazy stuff. It's the impossible category. It's been called the impossible category so many times, right? But they haven't looked into the financials, and they haven't seen literally in the past, like call it 4 to 6 quarters, the monster turnaround this business has had, like reducing stock-based compensation, outsized free cash flow growth. So we'll kind of touch on that. We'll touch on the big KPIs, some of the total trips, monthly active growth, that type of stuff. They're cost cutting. So I actually tweeted this earlier today, so maybe some people saw, but the cost cutting over at Uber, like significantly, like leaps and bounds higher than what the Googles and Amazons of the world have experienced in the past, call it 2 years, right?
Do you know what they're doing for cost cutting? Like anything specific?
SG&A, right? So you're cutting on headcount. The major thing was, I think at one point about 40% of revenues was marketing spend. So realistically, you could kind of cut back on the crazy advertising budget. I think
once you got a verb moat, you don't really need it anymore, right?
Right. Like I think it forced the bottom line after a little bit there, And then lastly, we'll go through my spreadsheet. I've built scenarios, and we could kind of fine tune it as we go on here. I'd like some input from you guys towards the end there of like what we should do for the inputs. So any questions so far?
No, I think we're all on the same page on the bullet points here.
Yeah. Okay. So first things first, just some quick numbers. Uber is operating in 70 countries around the world, and this is a mix of both mobility and Uber Eats. So we don't know exactly what the split is, but together they're in 70 different countries. They have 8 million drivers on their platform that every month they're doing at least one ride. And on top of that, they have 150 million or 160 million monthly active users, if I remember correctly.
Yep.
We could. Fiscal, do you know?
That sounds right offhand. And the other thing is like they have, in addition, I mean those are the ones that like recur and at least once a month, but there's a lot that like during seasons like the holiday season, like right now, maybe they're traveling and they may get Ubers in November, December, but not maybe the rest of the year. So they get maybe like a Q4 bump maybe from that potentially, I would guess. Yeah. I mean, you notice it right here, right? So this is on the quarterly view in Q4 of 2022, slight bump, and then there was actually a decline in Q1 the next year. Not crazy, but still exactly what you're talking about. Yeah.
Q4 always has a little bump, and then Q1's a bit of a dip there. But nonetheless, 160 million monthly actives. This compares to like just I don't know, maybe some people aren't too in tune with the numbers. I think Amazon Prime is like 250 million. You have YouTube Music, which is roughly, I think, 100 million. Maybe Netflix is like, I think, approaching 300, right? So just to kind of give you some numbers as like essentially like a paid service. This is with the big leagues, essentially what I'm trying to say.
Mhm.
Yeah, for sure.
Right. Another thing we should look at. So you guys know how Waymo is kind of bragging of like, oh, we did 150,000 rides, right? 150,000 rides this week. So Uber, orders of magnitudes higher. They've done over the past year 10 billion, almost 11 billion total trips.
Yeah. So that would be what, 3 orders of magnitude then?
Yeah. So just
Which
little bit more.
for anybody that isn't aware, an order of magnitude is when basically you add an extra 0.
Right. And then maybe, I guess, while we're kind of doing this, I'll compare it with Lyft over here, because I think maybe that's more of like a distant sort of their thesis of like, oh, like Lyft could realistically come and undercut them. There's actually, I believe, like an economic theory talking about how usually in a kind of like a duopoly or oligopoly market, when the number one player is like exceeding, I think, like 65% market share, the number two player is like roughly in the 25% area, they kind of even out on pricing. They don't really pursue. I believe I've seen something like that. Again, taken with a grain of salt, but that's exactly like the way it is. Like Uber has what's it called? I think like 65-70% market share. So this is Uber versus Lyft, just for reference. Again, like see like more than 10 times, I think like 13-14 times bigger than Lyft on that front. Any kind of pushback on the moat?
No, absolutely none.
I think it's pretty straightforward, just because it's a business that like we all kind of understand.
For sure.
Like there's riders and there's drivers on one side, and then all the drivers kind of know that like if they drive for Uber, there's going to be a lot of consumers on that front that they would be able to access, comparing to like a Lyft or other even like a yellow cab taxi. You know what I mean?
Mm-hmm.
So classic network effect. I think it's pretty straightforward to follow on that front. Yeah,
100% with you.
Maybe one thing before we move on here, because this will tie back in with Waymo later on. The like number one focus of Uber isn't actually to, I don't know, kind of expand into different countries and that type of stuff. Their number one focus is to actually drive the most amount of liquidity. Liquidity meaning the most amount of drivers for the most amount of riders in every single market that they enter, right? And the point of that is that like Uber drivers, and of course you've probably heard in the news of like, oh, Uber drivers aren't paid enough. Have I been sharing my screen this whole time, by the way, or no?
No, we've been seeing your wonderful, wonderful, handsome face.
Hey, no diddy.
Okay. Oh, that's awful. You saw the Finchat chart from like...
Yeah, we did.
Right?
Yeah, the first chart you showed the comparison between the revenues and stuff. Yeah, but and then we saw the bullet points here that are up right now.
That's unfortunate. Okay, I was showing stuff this whole time. That's unfortunate. Anyways,
okay.
With Uber, main focus, liquidity, driving down ETAs. And then you guys have probably heard of like Uber drivers aren't paid enough, which like technically kind of, if you factor in costs, it's very variable and like depends on how many rides you get. That type of stuff. So the point of that is that Uber's number one primary goal to make a better job for drivers is to drive their utilization rate higher. What is utilization rate? Driving the total number of rides they do per hour to essentially where if you're a driver and you're on the app and you're waiting for to deliver food or to drop somebody off here and there, like essentially you want no wait time between dropping this person off and doing the next job. And on average, if in theory a driver was able to drive consistently for the entire hour, right, they're earning like something like $33 an hour, which is a very fair wage for essentially just being a driver. Like
if there was like a continual queue of either
so how do they control the demand?
Rides,
that's the thing.
How do they what? Sorry.
How do they control the demand? And especially in like very saturated markets or as well, even in non-saturated markets, like how are they gonna make sure that they're not waiting for somebody? Like
They
you
can't.
want to go Uber? Oh yeah,
So they can't, right? So
yeah, it's my kind of
the
issue.
point is, unless in you're like, I don't know.
I don't think this is a giant issue for them either. Like we're in a world where Starbucks baristas are the victims now, so I don't think Uber's gonna have some strike.
In New York, they had strikes. It was like
Oh.
0.1% of the total driver base.
Yeah.
Whatever. Same thing with Starbucks. No, like it was like
Yeah.
such a minuscule number of the baristas. I digress. The point is, with the way the world currently works, you can't drive 100% utilization rate, but that rate has been improving over time, especially over the past, call it 5 to 7 years, as we kind of went through the pandemic period. Uber was more, especially the Uber Eats side of things, that business propelling forward, and it's been growing massively. It was doubling year over year, right? So giving drivers more stuff to do, and now they're kind of breaking in like grocery and retail, which questionable whether it's successful or not, or whether it will be successful. But then again, like it's just demand to do something else for the drivers, right? Like it drives that utilization up, and it makes drivers happy over time, because all of a sudden, on average, instead of earning $18 an hour, they're making $22, $23 an hour, right?
Mm-hmm.
So, yeah, like utilization rates over time should consistently go up as the network expands, as there's more consumers and more drivers on the other side. Like it's this big balancing act of supply and demand, right?
Mm-hmm.
Yeah. So that's one thing. It'll tie back into Waymo way later on, and then what we'll do on the consumer side of things, where you're like, realistically, if a Waymo is going to take 10 minutes, the odds of you choosing a Waymo, if it's same price, which in actually some cases the Waymo's slightly more expensive, you're going to go with the Uber, right? Because you'd rather wait 3 minutes, not 10 minutes, right? Anyways, let's hit the fundamentals. First things first, for those of you who have, you guys can see my screen now, Ken, right?
Yeah.
Okay, beautiful. So yeah, first things first, for those of you who have not seen the Uber financials in, years, let me show you the free cash flow chart. And oh, sorry, we got rid of Uber here. Oh, it's on the thing. Okay, there we go. This is Uber's free cash flow chart. And you could see, and maybe if we bring this back, this was Uber's history in like the 2020 to 2022 period. It was a business that for the entirety of its public existence, it had been wasting cash. It had been burning $5 billion of free cash flow at the peak of it in the 2020 period. Granted, they're going through the pandemic at this point, so questionable whether or not like that's a true, like proxy for actually how badly they were running the business and how much cash they were using. But they were competing on price here, right? So they were consistently discounting and providing incentives to drivers to continue driving, and giving very generous. I'm sure you guys remember, like they would give you like 50% off Uber Eats just to try it. Dude, they're losing so much money on that, right? And at this point, they're still in China. They're still in Southeast Asia. They're competing in all those markets. It's just an absolutely disaster of an investment. I would personally never invest in this type of business, right? During the pandemic period, they started to improve these fundamentals. They started to cut costs. They started to the main thing actually that they moved out of was they moved out of so many different just random like pet projects of like for example, they had the self-driving Aurora thing, right? So they divested that. They had so many other like tiny little business segments that weren't core to the rides and eats part of the business. So they just divested out of all those things. They just either sold them off or just completely stopped investing into it, that type of stuff. So over time, profitability started to improve. And so we start getting this picture of a free cash flow positive Uber. And then all of a sudden today you have a business that is doing $6 billion of free cash flow in the past 12 months. Might I remind you, this is a company that is doing, that has a market cap of 120 billion, right? So that lands you at like a 5% free cash flow yield. What about stock-based comp? We could factor that in as well, right? So if we take stock-based comp, actually, I think I need to, here we go. So if you take stock-based comp, like it eats up about a third of it. So not great, but at the same time, like it's significantly better than what it was like in past times, right? There we go. I think
that's one of the big reasons the stock is at such a discount right now, because everybody gets to cry and bitch about it. I'd be willing to pay that. Like,
yeah, like even if you factor in stock-based comp, I think it's around a 4% free cash flow yield, which for a business that like grew free cash flows at like, I don't know, 40, 50% in the past year, obviously that won't continue, but it shouldn't slow down too much further from that. Like you're still looking at like around 30% free cash flow growth for the next couple of years, at least. 4% free cash flow yield is not a demanding valuation, right? Yeah. Quick breather. Any thoughts, concerns?
We're gonna talk about margins, right?
Yeah, we'll get to
margins.
Okay. I have everything here, right? I guess while we're kind of at the cost thing, I should mention this. This I posted earlier today, right? So this is sales, general, and administrative costs as a percentage of total revenues, right? Make sense?
Yeah.
Yeah. So it went from roughly 70% of your revenue that you bring into the business is going towards paying overhead, paying insurance, paying your employees, paying the office buildings, which they don't have too many office buildings, but still like paying all these like business expenses that isn't actually directly correlated to the product, right? Paying, actually no, R&D isn't included here, but just paying overhead, right? So this as a percentage of total revenues has consistently gone down, and it makes only 17%. And maybe just to kind of throw like a comparison in here, I like to look at Google, and like Google today is meaningfully lower, but like not too long ago was Google in like a similar-ish area. Yeah. If you want to maybe, I don't know, throw Amazon in here. I know Amazon's much higher. That's a little bit of a special case. So Amazon's actually meaningfully higher, right? It's at 25%. And the lower is better here, right?
Right. Yeah.
So this, again, speaks to them cutting costs, focusing on what's core, doing more with less, and being able to expand margins and that type of stuff, right?
Do you know how long the CEO's been with them? If they...
So 2017.
27. Okay, so he's got them out of this.
Yeah, he's been there. He's been there a long time, and mostly responsible for their current like free cash flow levels and stuff. Probably.
Yeah.
Explosion.
Yeah. He's
and the fun fact about their CEO, he is on the board of directors of Grab.
Oh.
Yeah. Yeah. He's also he was the former CEO of Expedia, right? So he's still on that board. Very, very fascinating, and coincidentally also Persian. So a little bit of personal bias there.
Oh no.
Yeah. But no, if you guys get a chance, I would 100% just search up interviews by him. Just such an exceptional, like he doesn't BS you. Just such a great speaker, almost like presidential like. Like when he talks, I kind of want to just like rally behind him. I'm like, yeah, let's go do this. I don't know what we're doing, but let's go do this, right? So he's they're very good.
He's got Riz. Is that what you're saying? He's got Riz.
He has the X factor with him. Let's leave it at that. Yeah. Again, any thoughts, concerns? I feel like I'm just going on and on and on here.
Yeah.
I don't know.
No.
Yeah. We'll grant that. Yeah, the CEO is one of the selling points for sure.
One of the selling points. Okay.
Yeah.
I was supposed to pull up the thing here. I guess we'll skip it for now. Just take my word for it. I know the numbers off the top of my head. So I guess we've kind of covered like, okay, they've cut costs, which is great. They have crazy free cash flows, right? Also amazing, and it's going to continue to grow. I kind of want to touch more on like the specific KPIs, right? So like, okay, this business has grown. Great, whatever. Free cash flows are amazing, that type of stuff. But like, where is the incremental growth of this business going to come from? And to that, I want to look at like a handful of different things. First and foremost, the total number of trips that this business is doing. That on its own is growing at 20% year over year, right? Over the past over the past 4 quarters compared to the 4 quarters before that, they've done 20% more trips, right? Of course, the split of like how much of this is in America, where obviously you're charging a higher price point for that compared to international, like the split of that, it's actually about 50-50, but like still, this incremental growth, I would assume most of it in terms of total trips, most of it is coming from international, which means realistically, sure, the total trips are growing at 20%, the revenues will probably grow a little bit slower. And we could overlay that as well, if you guys want, where I think it's growing at like 16%. Let me just clean this up a little bit here. Oh God, that's ugly. So yeah, revenues are growing about 16-17% comparing to like a 21% growth rate in terms of total trips, right?
Mm.
Cool. guys?
With you. Yeah.
Yeah. And then the company themselves, they've guided for gross bookings, which is like a similar number to this. They've guided for that to grow above 20% for the next 3 years until the end of 2026, right?
Oh, dang. Okay.
Kind of painting the picture here of like, yeah, like you have this base, like a really strong base of total revenues that are growing and gross bookings that are growing in like the mid to high teens. And then on top of that, you have margin expansion. That's where the massive free cash flow growth story could continue. But then naturally, another question that comes up would be like, oh, okay, but this is not a business that is, like a software company where it's a reoccurring revenue. This revenue growth and just the revenue in general is not guaranteed. It's consumption based, right? It's total number of rides. What if we go in like a poor economy and Uber ends up, not doing so well and growth slows down? Counter argument, we could take that two ways. Number one, Uber is actually one of very few businesses on earth where it's counter-cyclical. Counter-cyclical in the sense of like in a bad economy, they end up doing better. So like you could think like Walmart is like the classic example of this, where in a bad economy, people are going to trade down in retail. Sorry for the Target shareholder here with us.
That's fine.
They're going to trade down in retailers and they're going to seek better prices. Similar to like Amazon. Amazon traditionally low prices, Walmart traditionally low prices. And so if you actually, and you know what, maybe I'll demonstrate it here too. But if you pull up Walmart's financials and you go look at like 08, right? And so if we pull up 08 here, you'll notice that like there was a slight acceleration in revenues. Maybe not 08 specifically, but the point still stands. They do. There's businesses that are counter-cyclical where they do better in bad economies, right? Because it naturally makes sense. Like people seek lower prices, and so how does that relate to Uber? Isn't Uber technically like a premium service, right? Where like people are like being lazy and like paying a premium to get their food delivered to them and that type of stuff.
It is a funny point,
right? Like technically it's kind of hypocritical, right? So wouldn't Uber, if it's a luxury, wouldn't that do worse in a bad economy? The point is, and people always forget about this, you're thinking of it as a consumer. It's a double-sided network effect. In a bad economy, people lose their jobs. They're in a bad state. They're not financially doing too well. What do they end up doing? They go into gig economy jobs, such as Uber, the most accessible gig economy job, and for a little bit of extra income. So what does that do? So in a bad economy, you have your consumers. They're staying flat. They're just buying stuff, right? But then on your driver side, you have a surplus of drivers that are coming into the network seeking for extra income.
Oh,
right? What does that do? If all of a sudden the balance is tipping in,
the cost per driver goes down.
Drivers,
yeah.
What happens to the cost per ride? It naturally slightly ticks down. So it makes it more affordable for consumers. So you have more drivers coming in, making the total cost of mobility and the total cost of Uber Eats, making it slightly cheaper and making it more affordable, compensating for the fact that not that many total people are buying, Uber rides and Uber Eats and that type of stuff, right? And so it's counter-cyclical because there's more people coming in as drivers. It'll drive prices down. It'll make it more affordable, and so they end up doing a higher volume of gross bookings. Does that make sense?
Yeah, I feel like the Uber Eats would be like the only thing impacted like during a rougher economic time, because I feel like I don't know. A lot of people rely on Uber.
So I mean, look at what Blake said. That probably explains why people don't give up their Uber Eats necessarily. Yeah, because the cheap emotional
high tide.
Yeah, but yeah, I mean, if you're in hard times and you're trying to work like extra hours or whatever to make ends meet and like you're exhausted, you might just cave and get the tacos from Uber Eats,
Yeah.
And then this kind of ties with something I see with Chipotle as well, where technically at the end of the day, like it is priced at a premium, but the average Uber consumer or the average Chipotle consumer, they're a little bit higher income, so they have, I believe, it's a little bit more inelastic demand, right?
Yeah.
So
wasn't there like a stat where like in the neighborhoods within 2 miles of the average Chipotle, the average income was like $70K or something, which is that's like solidly like 10-15% higher than the median
I do recall like a 76 number in there somewhere.
Yeah.
So exactly, like the neighborhoods where Chipotle are, typically it's a little bit more higher income consumer. So in a downturn, they still have a little bit of income to kind of play around with and like spend on luxuries that they like, right? And so I apologize for the Walmart example not really falling through, but you could see this in Uber's own numbers, right? So as the economy has progressively gotten worse, and this Q4 2022, right? So this is right around the time that the Fed started increasing interest rates. Of course, increase interest rates, the economy slows down a little bit, and the flow of money slows down as well. And you could see like the effects of that really started to peak in Q3 of 2023. So roughly 9 months after the big increases start to happen and whatnot, right? And so the total revenue growth slowed to like 11%. And then since then, we've seen a slight reacceleration. Again, not necessarily entirely due to what I just explained. Sorry, apologies again for the noises and whatnot.
Hey, I'm enjoying it. I don't know what you're talking
You haven't heard anything?
Dancing. No, I'm joking.
Can you hear background noise? I'm sure you can.
A little bit, just a little bit. It's not really that.
We've had
Again,
worse.
apologies.
Just don't call attention to it, and nobody will notice.
Got it. No problem. Anyways, you can see like slight revenue reacceleration, partly due to just Uber, the business. But then again, partly due to what I explained of like, as these people in 2022 kind of get laid off.
The Oracle has struck.
as these people kind of get laid off and whatnot, they'll start to seek higher income and that type of stuff. So that happened during like the back half of 2022, start of 2023. And we've seen revenue reacceleration due to what I explained, right? Make sense?
Yeah.
Cool. I don't have too much. Oh, okay. One last thing to explain in terms of the fundamentals, the average revenue per user, right? And I made this mistake with Meta initially. I'm like, oh, the only incremental growth is more users going on Meta using the apps, right? That's the only way they're going to grow. They're at what, 3.5 billion users? They're running out of humans to have use their services.
Yeah.
Surely Meta's going to do somewhere.
Yeah, everybody with like a smartphone or an internet connection has at least one account on something that Meta owns.
Right. They're going to run out of humans soon here.
Yeah.
That is uninvestable to me. Where I made the mistake, and I'll demonstrate this to you as well. By the way, we've been using Finchat all along. What a remarkable, honestly,
link in description.
Sorry?
Link in description. We left in the comments.
Genuinely a remarkable platform. It has basically anything you want, right? So with Meta, and I'm struggling to find it here because there's so many KPIs they report, but there's something called the average revenue per user. Maybe if I just search it up. Average revenue. Here we go. So this is US, worldwide average revenue per user, right? And it's very straightforward here. In any given year, how much money is Meta making off of every single person that they're using, averaged out across every single user that uses their services, right? And so for Meta last year, in 2023, that figure was roughly $45. On average, a Meta user generated $45 for the company, right? The revenues, like, makes sense, right? So the mistake that I initially made was, they're going to run out of people soon here and they're not going to be able to grow. The thing that I missed was that ad rates over time on Meta, because it's ultimately like a marketplace in of itself. Like there's advertisers bidding on putting that t-shirt in front of you on Instagram when you scroll, right? There's real companies and businesses that are bidding on that placement right there. And that rate consistently has gone up over time as we've kind of seen a shift of traditional advertising to digital advertising. This balance has kind of shifted, and it's going to continue to tip in favor of digital advertising. What's like basically the biggest digital advertising company in the world? Meta and Google, of course, but we've seen more growth with Meta. It's up for debate why that is and what that type of stuff is. But you can see it's grown at roughly 20% per year over the past 12 years, right? And so a similar thing happens with Uber. Again, it's in the investor slide somewhere. I'm not going to bother trying to find it because it would probably take too long. It's like a 120 slide investor presentation there. But similar thing happens there, right? So exactly half of Uber's users either take one ride or two rides with Uber per month. I'm going to repeat that one more time. Exactly half of Uber's users take 1 or 2 rides with Uber every single month. Now, the part where it gets interesting is the possibility of in the future, and I'll maybe draw it to an anecdote of myself, but in the future, I think as people get more comfortable with using Uber and they consistently use it, once or twice per month, they'll drive higher frequency. So like maybe, I don't know, I'll download it, I'll get my Uber Eats once a month, occasionally, whatever the case is. And then maybe my mom will also join in on the same account, and then she'll start ordering a couple times. And then over time, there's actually a lot of cross-selling there as well. So if I start out with just the Uber Eats, the odds of me choosing Uber, like just the basic Uber X as my rides platform, increases incredibly, right? So then I'll start taking rides with Uber as well. And over time, this frequency starts to increase. You know what I mean?
Mm-hmm.
Yeah.
How many people do you think have shared accounts?
I would say there's definitely a good amount of people who, I mean, me personally, my family, like we share like a family account.
Yeah.
Mm.
Naz is a good question. He said, what do you guys think about the fact that a lot of people who pay for the Uber One don't actually pay for it? It's a free trial. I mean, I think people would be integrated into it regardless.
Yeah.
We see the value there.
I mean, it's the same thing though. Like there've been free trials of like every streaming service.
Yeah.
I mean, Disney Plus, Paramount Plus, Netflix, and all that stuff, and they're all figuring. You
can illegally stream that too. It can illegally stream. Uber.
Yeah, I mean, they're and eventually the free trial ends, so it's not as though they can have the free trial and then like do the free trial again later or anything. Yeah. Like I'm assuming that per account or per person or whatever, you get the free trial the once, and then if you don't cancel it, it renews and you pay for it. And if you do cancel it, well, then you're paying full price for rides and stuff again. Yeah. So I don't know. I don't think that's too much of a factor. It doesn't seem to be hurting their financials much. What do you think?
The subscription canceling
of the Uber One, yeah, like just using the free trial and not buying it after that.
I don't know. Does that not happen with all subscriptions?
Yeah, that's kind of what I was saying. That like pretty much every subscription streaming service we know about has had free trials at some point in the past, and they're still making money. Netflix and Disney Plus are. The other ones are still working on it.
I would throw like Costco, Amazon in there. Like they're probably doing pretty decently as well.
Yeah, I mean Prime used to be really like, I don't know if it was ever free, but it was very cheap at one point.
It's what, like, dude, they haven't raised it in ages, man. It's like $10 a month, and then I'm on student discount as well, so I'm paying like $50 a month. Family shared, paying $50 a month. You know what I mean? Like it is not.
Yeah,
that's Canadian, right? So it would probably be less American as well.
But yeah, I mean, I think enough people convert on the free trials that they've probably sussed out that it's worth offering them to get that foot in the door with people. Like I'm assuming that Uber has worked out the economics of it,
Yeah. So, okay. The next thing I kind of wanted to talk about, actually, we kind of skipped over this, was
we can't see your screen, by the way.
I know. I'm just kind of talking. So Uber is a consumption-based business, and it's not subscription, right? And I'm not going to argue that the Uber One subscription is like kind of creating this recurring revenue. It's in its early stages. They're offering all these deals of like a couple bucks a month for like the next 6 months, right? Like that is not generating that much revenue. The last time we heard about it in May, it was greater than $1 billion revenue run rate, right? Up to you to decide what the retention rates are. I would assume not that high. I would assume, 30% of people annually are canceling. It is not that great of a subscription at the moment. But nonetheless, still generating revenues. But the more important thing is that once you pay, even call it $10 for the next 3 months, right? Which is like a decently cheap subscription, right? Even if you pay the littlest amount, you still paid some amount of money to Uber. And that naturally drives this psychology factor of like, oh, I'm a Uber One member. And the next time, like, I don't know, you're thinking about like ordering something from DoorDash or Uber Eats, you'll immediately default to a thing just because you have that membership that gives you the 5% discount. And it goes all the way back to the gold standard, the Costco membership, of like, you end up spending more because you have the membership and you've already kind of put your foot down and like you're obligated in some way to.
It's a sunk cost, and you want to get your money's worth.
Maybe that starts to play, of course, different for everybody. But like, yeah, actually, I would assume that has a large portion to do with it. You know what I mean? So
Joseph Carlson always wins at the end of the day. You can run, but you can't hide.
Yeah. And I have numbers for you guys. So it's Uber members. There's, I think, 25 million Uber One members, which as a percentage of like 160 million monthly actives, that's a pretty decent chunk of monthly actives that are Uber One members, right? And then they drive 40% of gross bookings. So that's the reoccurring revenue that I'm kind of like talking about here. It's like you have this like core user base that like, probably buys Uber Eats or like rides with Uber a couple times a month, like more than the average Uber user. And they end up getting the Uber One membership. And then that just drives the frequency up even more.
Yeah. I mean, if you ever, there's a show on TLC called My 600 Pound Life. Uber Eats has been a miracle for those bedridden, 600-pound people. I
saw Tactical Shoe Shiner's wife on there one time.
Brutal, absolute brutality. But yeah, I mean, there are probably some people that literally, either out of necessity or addiction, like continually order Uber Eats at least daily, and that's probably an outsized portion of their revenue, like the very gluttonous.
Yeah. What do you think Uber's big money maker is?
Okay, we could go to Finchat, and I would be glad to answer that question for you there, Ryan. Yeah, so at the moment, the core rides platform is absolutely the moneymaker. Can you guys see this?
Yeah.
Okay, good to go. Yeah, so without a doubt, the core moneymaker for Uber at the moment is the rides business. I don't actually know the split of what is that compared to Uber One. Compared to Uber Eats. And there's actually a new feature Finchat added. It's called common size. So essentially you click that, and then it shows whatever number you click as a percentage of like the entire line item. So we could click like mobility revenue, which is just the core rides, as a percentage of the entire revenues, right?
Finchat better sponsor the Cash Flow Kings by the end of this episode.
I could pull some strings together.
I like that. I like the sound of that.
That's what I like to hear.
Yeah. Actually, I'll tell you guys something privately afterwards. But
oh boy,
something cool happened. Anyways, so this is the blue is mobility, and the yellow is delivery revenue, right? So delivery revenue makes up 30% of total revenues across all geographies, and then mobility makes up 57%. The remaining, call it, 12, 13% is the freight revenue, right? So we could run on stacked as well. You can see it totals to 100% between the three segments. You might notice that the dark blue has decreased as a percentage of revenue. Again, just the freight hasn't been growing, has been declining, if anything. Right?
Yeah. It's been a rough freight market the last couple of years.
Yeah. Thanks, Fiscal. All your fault.
Yeah, all my fault. I tanked the freight market, guys. Sorry.
It is. Yeah. I guess something cool, I'm kind of noticing this as we go on here. Mobility went from 92% of revenues all the way to, it troughed at 40, but then now we're back up to like 57% of revenues. So, yeah, something to watch out for.
Oh, we got an Uber One subscriber in the chat.
Yeah, we have multiple actually. We have Seymour Duck. We have Double D's.
Yeah, I imagine for students that maybe don't have aren't allowed to park cars like wherever it is they're staying in dorms or whatever. Probably Uber's the only option they have, right?
Absolutely. Yeah, Fiscal. I've told you the infamous Uber story here on the Cash Flow Kings before.
Yeah, with your friend.
May or may not have taken an hour-long Uber into
and didn't tip the driver.
City of Chicago to potentially get some on a Saturday night and didn't tip the driver. Not bullish. Bullish for Uber, but not bullish for the driver. Margins. How are the margins looking?
You want to hit margins? Okay.
Margins.
We'll do back on finchat.io.
The reason we know how to use margins.
Yeah.
Okay. I do. So this is the only sort of affiliate or sponsorship I took on the channel. I wholeheartedly believe this is the greatest stock research platform. We've kind of been doing it all stream long, but like I literally use it every day, and there's everything on here. And we've only been doing like fundamentals and charting. There's so many other like screeners and analysis tabs and like super investor stuff and all types of crazy stuff.
Do they have an AI segment where they have the AI analyze your stocks?
They do have a Copilot.
Oh, I'm buying. Oh.
Well, there's a Copilot.
I wonder how they integrate that into there.
Yeah, I mean, you could ask it. This one's kind of trained on like earnings call data and that type of stuff, the transcripts and whatnot. So I mainly use it for that. Realistically, I'm not going to find the time to listen to like 6 hours of earnings calls every single earnings season. So I'm like, yeah, just give me the key points of ASML's thing. And if there's something like really interesting, I'll just hit up Control F and I'll go find that in the transcript and I'll read that segment, right? Like huge time saver. Yeah.
Seymour Duck uses it. Yep.
Okay, so you asked about margins. Margins get freaky. So we could do. It's difficult because, and I know Fiscal, you know this. They have, I think, what is it, like $9 billion of equity investments in like the Uber of whatever region. So I think Didi and Grab alone are, I want to say, about 4 billion together.
Yeah,
so
they have. I think like somewhere in like the 12 to 17%, something like that in Grab. I can't remember the exact number, but it's a double-digit percentage, and Grab's market cap has taken off recently into the, I want to say like the 20-something million range. Let me see.
14% of Grab is owned by Uber.
14%, you said?
14%. 14%. Okay. And then let's do Didi. So Didi is the Chinese version of Uber, and they own 13% of that, right?
Yeah. But yeah, Grab is like right just about touching a 20 billion market cap. So their 14% is like, what is it, 3 billion or something like that?
So it's a 20 billion market cap. So that would be a 6 billion investment, roughly, just shy. Yeah. Margins. So with the equity investments, but I don't know how the accounting works exactly, but if it's not like a majority investment, they can't recognize Grab's, for example, earnings as their own earnings. Instead, what they do is they do what's called mark-to-market accounting. So they would say,
no, that's what Enron did.
Enron.
I researched that for my accounting final.
Yeah, nice. Anyways, so but the way Enron did it was like super shady, and like they were doing the lifetime value of the investment, mark-to-market accounting. So a little bit different. I think regulations have changed since.
Yeah.
Uber's not committing fraud. That's what I'm trying to say.
Committing the fraud of being a good business. So we're committing the fraud of.
Yeah. So, but it's very commonplace. I think maybe if some investors were around in like the 2021 period, as Rivian stock went down, Amazon's earnings tanked.
Yeah. Again, no. But like actually, you have to do it that way. Like, because I think Warren Buffett was complaining about them having to basically like the non-realized gain or loss goes onto the net income or whatever, right?
Yeah.
Buffett was like really like saying like that doesn't make sense, and he doesn't like that they have, because that affects obviously Berkshire a lot. It's not a good way to tell like how much income they're actually producing, because those unrealized gains and losses aren't any income or loss. They're because until you realize it, it's not really real.
I'm sorry, Jonathan. I'm sorry. We give our graces here at the Cash Flow Kings. We live and we learn.
Sorry. So I'm on a laptop today. I don't know if you guys caught on, but I can't really look at the thing and also do what's it called?
You missed it.
Yeah, I bought Lift.ee.
Yeah.
Ooh, that is unfortunate.
That is.
Uber, Dash, Cart, Airbnb seems like same bucket of phone app companies. I don't get how it stands out from the rest. Eric, respectfully, did you just join the stream?
I think Eric owns MPW. I think that's what it is. Actually, Eric might be against MP. I don't remember.
So I mean, this could just be like a technophobe type take.
So I'm sorry to interrupt. I'm gonna just quickly go fill up on more coffee, so I'll be back in a minute.
Oh yeah,
Yeah. Okay. But yeah, I mean,
it's probably overvalued.
I mean, there's an argument to be made that Airbnb is a decent investment.
Yeah.
Um,
Anti-Buffett right now. If he were still around, he didn't die. He just mysteriously left one day.
oh, he left your Discord.
He left like everybody's, dude. Nobody's heard from him. He's like a mythical legend now
Oh,
for like no reason. It was interesting.
oh, I didn't
For
realize.
like no reason why.
I haven't been as involved in a lot of Discord conversations lately, so I didn't realize he was missing in action.
It's been a while. It's been like 6 months.
Jeez. Okay.
It was around. Actually, I'll message it to you. I probably shouldn't say it on the stream for the sake of privacy. But I'll message what he said to me. Wasn't bullish. Pull up some comments while we wait. While I message that. Some comments we haven't addressed. Channel members can find out what he said also for only $2 a month.
Okay.
There he is.
Okay.
What coffee are you sipping on, Tim Hortons?
No, I think it's a Keurig. Yeah, I'm not at my house at the moment, but yeah. No, it's good. Odd taste, honestly. You know what? Any of this stuff, way better than Starbucks. Starbucks is burnt, man. It is. It's not good coffee.
You know who
the
else?
right stuff.
Actually, you know who else left recently?
Oh.
Leaf Eric. He's not.
Oh, what happened?
I don't know. He somebody told me that he left the Discord and sold out of MPW. That's what somebody told me.
Trader.
I don't know if that's 100% confirmed or true. But somebody did tell me that. And I guess I should reach out and see if it's true or whatnot. I don't know. Like there was no
with that MPW.
Like there was nothing in the chat history or anything to me that struck me as like I'm leaving. You know.
Let's see if he's in mine still.
No, he's not.
All right.
We have no mutual servers anymore. So
boring.
Yeah.
Yeah, we're all buying Party City. You got us, John.
Yep. OTC Party City, all in, guys.
Awful. They're going bankrupt, no?
Yeah.
Yeah.
I was gonna sell all my Target and put into Party City for.
It's like Toys R Us. I'm sure it'll be.
We'll be back and better than ever.
Yeah, isn't Spirit Airlines also in bankruptcy right now?
Yeah, they're supposed to be bought by I think Alaskan, and it got blocked or something.
Yeah, and because that acquisition would have meant it was JetBlue. I thought that was buying them, but
yeah, JetBlue.
But yeah, it was gonna like hurt competition or something. It's like, but Spirit going bankrupt also hurts competition. So what? Well, what are you doing except costing like those flight attendants and stuff their jobs? You dumb fucks. Wasn't it like Lena Khan that blocked it?
Lena, she's gone in a month. I'm so happy.
The next administration, right? So
give me a month, dude. Quite literally 1 month. Lena Khan will be gone.
Well, word has it that that she was done no matter who won, like because I think Mark Cuban, who was like on the other side, was also against her, and so I think Lena Khan, her days were numbered no matter what.
Yeah.
Mm-hmm. So everybody,
Trump confirmed it because they, at least with Kamala, she was probably done, but like there would have been some.
But you know, the only problem there is the replacement might even be worse, right? So yeah. But yeah, I think we're not going to have anybody trying to bust up the big companies or stop any mergers in the next administration. So
a fun fact while we're on the topic of Starbucks, I was scrolling TikTok like 20 minutes before we went live, and on one of the live TikToks it was a protest outside of a Starbucks in like Seattle. It was like a workers' strike. And the person behind the person that was filming it just did not know anything. So I'm like chirping them in the comment section. I'm like a bunch of entitled baristas. I'm just spitting the facts. The guy and the person holding the camera is like, no, you don't know what you're talking about. Nope, it's not true. You are the entitled one. Actually, these are hard workers that get your coffee every day. It's time the rich man finally pay. It was just like, the logic with these people is like, rich man bad, poor man good. And there was a legit communist statement. You're just like, if I were in charge, I would have all of the workers choose where all the money goes and how much everybody gets paid. Good idea, bad idea.
Yeah, they all get $100 an hour.
Dude, I would pay so much to have one of the Starbucks union leaders on the show. I'm not even joking. I would like.
You should reach out. I'm sure you could find an email somewhere.
Yeah, it would be. Hopefully, they don't do any background research on some of the videos I've made about.
Will they come into hostile territory? That's the question.
Yeah. I was actually thinking, because one of the Starbucks by my gyms was one of the first ones to unionize. And we saw them all out there like 2 years ago, but they haven't been holding their signs out in the front. So I was thinking maybe I'll pay a visit and do a little interview, due diligence.
All right. You want to recircle back?
Yeah, I'll go back to Uber.
Okay, for sure. I don't think we got through the margin stuff. So
yeah, margins.
All right. Are we good here? Margin.
Do we know how to use margin?
Quote of the year. Next year's quote of the year show, by the way, everybody. That might win it.
What?
Next year's our quote of the year and comment of the year award show.
Okay. I don't know what you guys do. Okay. So I guess we finished off on mark-to-market accounting. Basically, they own a crazy portfolio of investments into the local Uber of all these different countries, where they're basically like, okay, either we win after years of losses, or we could just kind of take an exit, take a stake in them. Good enough. We're still present there technically through the 15% stake we took in the local Uber, and we avoided another 5 years worth of losses. You know what I mean? Seems fair to me, especially with China and regulatory is questionable there, all that type of stuff.
Yeah, it's the same in the places where Grab operates, like all the different sort of jurisdictions, like Thailand, the Philippines and stuff. They all have very specific rules about corporate opco ownership structures and stuff. And so Grab has to be very, very specifically structured with their opcos in each of those countries to be compliant with whatever the local government needs. And they also have to maintain good relationships, because some of those governments, like Thailand has a king. The Philippines has these political dynasties that you're not allowed to speak out against and stuff in public and things. So they have to kind of maintain these very, very amiable relationships, because the governments there, they do things a lot differently than they do them here. And so you need people that are familiar with how to navigate that stuff deftly. And it would be a big, probably, distraction for Uber to get caught up in all of that, I would think. And
on top of a pretty challenging macro within their top 10 markets, right? Yeah. Mm-hmm. So on top of the established markets where they're making the majority of their revenues and profits and all that type of stuff, it becomes too complex. It made sense in terms of looking at how much you would have to invest to potentially be the winner and then still be somewhat challenged. Of course, if you're one of those local governments, you don't necessarily want this US company coming out of nowhere, having all this data on all your people and all that type of stuff, right? I think this is the more favorable outcome between the two.
For sure. Yeah. I mean, Grab being Singaporean, I feel like that makes it a little easier for those other governments. It's a country then, at least in our same region,
based out of Singapore.
Yeah.
Yeah. Good.
Yeah. Instead of a bunch of for lack of a better term, a bunch of white guys from the US in suits, like kind of coming in and taking over, right?
Yeah.
Yeah.
Definitely. So anyways, because of that, I feel like I said this 3 times. Because of that, the EPS and the net income numbers based off of mark-to-market accounting at the end of each quarter on that day, depending on where the stock of Grab is, where the stock of Didi is, they have to recognize, for example, if the stock is at, 20 billion market cap, that means that is a 5-6 billion net income boost or whatever, I guess annualized, right? That they have to add to their net income figure, right?
Yeah.
Roughly. I don't know the logistics of it exactly, but that's how it works. Depending on where the stock price trades, that's where their EPS is going to be, right? Which makes it highly inconsistent.
Right.
And actually, if you go look at
because if Grab like 10x's, suddenly their net income just rockets up
balloons
because stock that they're not selling anytime soon like is worth more on paper, basically.
Yeah, but you would rather know what Uber, the actual business, has generated in net income,
Correct.
not this equity investment in a stock, right?
Yep.
I mean, even I think it's pretty simple, but even tying on like a personal level, you want to know like when you're considering, how much money you've earned this year, you could look at like your stocks, how much they've gone up, or like you want to know specifically the salary that you earned, right? And we want to know the salary that Uber earned, the revenues and profits that they specifically earned, right? So with that being said, if you look at like, net income margins, if we just kind of, I think it's called net margin, net profit margin. So if you look at net profit margin, it's artificially high, particularly in the last quarter, right? So in yellow here, let me zoom this in a little bit more so you guys can see better. Yeah, so net profit margin of 23% comparing to just the quarter prior was 9%. What causes, that's like a 15% swing in net income margins, right? It has to do with like this stock of Grab going up over this exact period, right? So free cash flows in general or operating margins tend to be a better proxy of actual profitability for the core Uber business. Yeah, like without a doubt, I believe that to be the case, right? With that being said, free cash flows also kind of have their flaw. It's depending on the timing of cash flows and that type of stuff. You might notice the Q4 is always a little bit weaker. If I bring this back a little bit more, you'll see like, the Q4 here was weaker compared to the last couple of quarters. Again, the Q4 was weaker compared to the previous quarters to that, right? So that also on a quarterly basis is, again, it could have its swings and whatnot. This is why I always look at it on a last 12-month basis. So it just adds up the past 4 quarters. And then if you look at it that way, the past 4 quarters, Uber has averaged a 14% free cash flow margin, perfectly in line with, free cash flow is actually going up as well, right? And you've seen this margin expansion story.
Mm-hmm.
Ryan?
Yeah.
Good. Any thoughts? Any comments?
Yeah, I'm ready for the projections.
Okay,
I already have a bit of a estimate of where I think it could go.
So what do you think? I'm curious to hear your
I'm
take.
thinking above like 110.
Okay. Based off of,
I saw some guy in CNBC said 120, but
Mark Mahaney.
Yeah.
Some guy on CNBC, the best source ever.
The best source, yeah. It wasn't Kramer either.
Oh god. Okay.
Proper
So I think we've kind of established, and I kind of want to go all the way back to when we were doing the KPIs. I mentioned they've guided for gross bookings of 20% over the next 3 years, right? So gross bookings, not 1-to-1 with revenue, but it's a proxy for revenue, right? So if you believe Uber's take rate is going to remain flat, which they have no, they haven't talked about taking that down, right? They've said they're not going to move it up. They're definitely not going to move it down. This is a new profitable period for Uber, and they're just going to have their take rate remain flat. That should translate to profits in the future, right? So realistically, if the take rate remains the same, meaning out of every $10 that Uber, like when you get an Uber ride, you're spending $10, Uber takes $2 of that, right? If that take rate remains at 20% out into the future, that should mean technically that your gross bookings that are growing at 20%, right? So that $10 number that's growing at 20% year over year, that should directly flow to revenue growth of 20%, right? And if you look at the revenue growth, particularly in the most recent quarter, right, it did in fact grow at that's trailing 12 months. So if you look at specifically the quarter, it grew at 20%, right?
Yep.
So just keep that in mind. And then with this is I call it a CAGR calculator, compound annual growth calculator. The two numbers in green here, these are just the numbers that Uber has actually generated themselves. Free cash flow, actually, it's 6 billion, not 6.6. 6.6 is for if you include Q4 that they're about to report. I digress. So these are the actual numbers Uber has generated. I think that they'll do like a 1% buyback for the next 3 years. So they've consistently diluted the shareholder. Dara, the CEO, he said this year they're going to be net, so they'll be even. And then next year in 2025, they're going to start to hopefully buy back some shares.
Interesting.
So, yeah.
I like buybacks.
I do. I also like buybacks. Yeah.
I like buybacks.
What about a dividend?
While the stock is relatively cheap for the growth and still growing.
Yeah. Very fast.
Yeah.
So, okay. Revenue is currently growing at 20%. Gross bookings, they themselves have guided for 20% incremental growth. But let's just be like uber conservative.
Oh,
that's awful. I think 15% revenue growth is like trough projections for the next 3 years.
Yeah.
Thoughts?
I think that's reasonable.
You think that's
Seems
reasonable?
doable based on what they've done to date. And it seems like even like in the last couple years when they've had like a slow growth quarter, it's still been double digits, in that 15% range. That's been like a slow quarter for them in compared to comparable prior year quarter. So yeah, I mean, but some of them have been, like 20, 25, 28%. So averaged out.
I don't think we're getting back there. It's too big of a. I mean, this business does more revenue than Coca-Cola now, right? I don't think we get there anymore. It still has room to grow. I just don't think 20% plus revenue growth rate, unless they start doing some new categories and it gains traction.
Hey, maybe the freight business starts to turn around.
Fiscal needs to pull some strings.
Sorry, I've got a hard on for the freight business. But that aside, though, yeah.
So I pulled up analyst estimates here.
Frothy.
Analyst estimates here. And so it's grown at 17% in 2023. Past 12 months, also 17%. And then projections are for 17, 16, and 16% in the next couple of years. These are average analyst estimates. So again, you have like a bunch of people on the low end, you have a bunch of people on the high end. Take it with a grain of salt, right? Sure. Then again, if we go back to the spreadsheet, I really don't think 15% revenue growth rate for the next 3 years is optimistic by any stretch of the imagination. I think it's fair to even
if you like crush them and say like maybe the next 2 or 3 years is like just worse than anybody thinks, and what if it's like 10%? It's still not that expensive,
Mm-hmm.
Okay, we'll play scenario analysis here, right? Free cash flow margins currently 14-15% roughly. I think it moves up another 2%. I don't think that's like, again, too crazy of an assumption over the next couple of years.
No, they can squeeze that a little bit. Yeah,
just pure like business efficiency, scaling. Obviously, your incremental costs don't scale with incremental revenue. There's going to be like that nice divergence between the two. Yeah, makes sense, right? So again, very fair assumptions over here. And currently it trades at 21 times just normal price to free cash flow, right? This doesn't include stock-based compensation. And so if you want it to trade at, again, like the multiple doesn't expand, it trades at 21 times cash flow at the end of 2027, right? You're looking at 22% per year stock growth.
What do we do at 2027 though? That's the real question.
Sorry?
What are we doing at 2027 though? That's the real question when it gets to 120.
Reevaluate. Is robotaxis real? I don't know. Yeah. But okay, so then let's do like a more bearish assumption here. Let's go 14% revenue growth rate and say that it trades down to 18 times cash flow. 18 times cash flow is like Ulta Beauty, right? So it trades to where Ulta Beauty currently trades at as a retailer, a narrow moat retailer that is scale constrained. They're not going to be able to grow past 1,300 stores in the US. There is a literal ceiling to the amount of revenue they can generate, right? Or the amount of stores that they could open. That's the business that's comparable to this valuation. And you still end up with a 16% stock growth for the next 3 years, right? Which is like beating the market.
What you're saying is that you could still have a decent winner on this without everything going 100% perfectly how you would want it to.
You could have things go bad and you would still end up beating the market. That's the thesis.
There you go.
That's bullish.
Even when things go bad, it's still a winner.
MPW can't say that. Once you get into like $1.
Yeah. I mean, I'm hearing from the Bears that one's going to be $1.20 anytime.
Yeah. So then, Ryan, you wanted to what numbers do you want to punch in here? Or I think this we said like 10% revenue growth. I feel like that's excessive, but nonetheless, like 10% revenue growth trades at a flat multiple, 17% stock CAGR. What are we talking about?
Very doable.
Yeah. So okay, let's do like a slightly bullish, maybe even like a fair thing, right? Let's do like 16% revenue growth, free cash flow margins, 18.5. Okay. And then flat multiple, you're almost at 30% per year stock price growth. Let's say it expands slightly, over 30%.
Let's say the multiple goes up a little bit because people start to realize it's good and get FOMO.
Okay, so 25 times cash flow is like a pretty strong multiple. All of a sudden, it's a 35% stock CAGR.
Yeah.
Right? Guys, come on.
Free money. It's the infinite money glitch.
That's what I'm trying to say. Like I've been yelling at the top of my lungs. I'm like, does nobody else see this?
Well, Joseph Carlson does now.
Yeah.
Maybe that's bad news actually for Uber. I might not invest now.
But yeah, no, it's definitely a compelling picture. I mean, how many other high quality companies that are growing like this are trading at 20 times, basically at 20 times free cash? I mean, granted, yes, that doesn't take into account stock-based comp, but it seems like they're working on that.
Yeah.
So I've kind of leaned towards, this may be wrong, I'm still working through it. Ignore stock-based comp, factor it into whether or not the company ends up diluting or not diluting, and then calculate it on a per share basis.
Yeah.
I'm not sure it works out because the company ends up kind of running in place a little bit, where like, okay, you're issuing $2 billion stock-based comp and then you're buying it right back. But realistically, it's only $4 billion of real stock-based comp. So I'm not sure that method falls through perfectly, but still work in progress.
Yeah, for sure. I mean, and here's the thing. I guess I'd also rather them use stock-based comp than have to maybe like, granted, I think they're past this point where they would have to do this, but rather than like take on debt to like fund their employees' pay, basically, right? Something like that. And I think stock-based comp motivates the best talent to keep producing for you. So there's it kind of aligns your interests with the people. Like the company's interests become the interests of the employees if they're sitting on a pile of stock, basically. So I think definitely during early stages it makes sense to pump up the stock-based comp and then slowly like rein it in over time.
Yeah. But Blake says to subtract it from free cash flow. If you end up doing that, it's 27 times price to free cash flow. So excuse me, just under 4% stock-based comp adjusted free cash flow yield. Still like cheap, you know what I mean? Like compared to other big tech or anything, like compared to anything.
Yeah.
Yeah.
Fiscal, are you buying?
Because I think like Google and Amazon and all that, they do stock-based compensation as well. You know, it's not like Uber is the only one doing it. So I'm not going to hold it necessarily against them, especially since you pointed out that it's been kind of slowly, you know, kind of getting more under control, right? Like it's not like they're like, oh, we're going to double our stock-based compensation. No, they're moving it in the opposite direction, just not like super, like they can't just cut it off like that, you know?
Right. Like it's not an overnight thing. Oh, all of a sudden we just stop issuing stock.
Yeah, because Grab actually has like a similar thing, like stock-based compensation's pretty substantial compared to you know, their revenues and cash flows and stuff. But they have talked about like, you know, drawing it down to a more reasonable level. So yeah, I'm bullish, my friends. I'm bullish.
Yeah.
Are you buying Fiscal? That's the question.
Man. I mean, it's only didn't it get below 60 recently?
Like 59 something.
59.
We're at 60.
Yeah, I mean, I'm very tempted to pick up like 100 shares of this.
Hey, you'd get more exposure to Grab at 14%. Oh,
that's true.
Think about it, you're buying Grab.
It's like I'm buying Grab twice, which, you know, if you're going to grab something, you want to do it twice, right?
That was slick.
Yeah. Yeah, I'm sorely tempted to grab 100 shares of this. Because I mean, it could be as we could be looking back in a few months and saying this was just as obvious as Amazon at 160, you know?
Yeah.
Or close
Those are
to
fun
it.
times.
Yeah.
I find it similar to the sort of Google episode, which is it's gone on for like a year and a bit. That's cool. You don't need to flex on us there, buddy. What is this?
Hey, he's not natty. It's okay. He takes Tren and Turk.
Oh god. Yeah.
Turkish
Trenbolone sandwiches. But no, I find it similar to the Google situation with AI. It's like this existential crack. It's for certain, you know, Google is going to get disrupted. The 10 blue links, it's over. The monopoly, the unit economics aren't going to work out. What came of that? Nothing. The revenue has just ticked up higher and higher since. User behavior has not changed. Right? And they're all of a sudden competitive with Gemini. They put the AI search query at the top of your searches now. It's actually ridiculously helpful. Right?
Yeah, especially when you're cheating on exams.
Yep. We don't do that here.
Yeah, we don't, but theoretically, if you were to.
The other people may.
Yeah, the people who are doing other things at Saturday 9 p.m. Eastern.
Yeah, those type of people. Yeah.
Buffoons.
Buffoonery.
Hour 30 in. Wow, what a good! This was one of the Joe Rogan like episodes I talk about.
I mean, well,
we got to talk about the VICI before we get off.
Okay.
We got to talk about the VICI. I'd like to say on behalf of VICI property shareholders that I am now the VICI cult leader, since Joseph Carlson doesn't have the pants to hold on to it. And I pray to God that this stock just goes absolutely linear. So like
interest rates, with interest rates going down.
Yeah, it's just we need it to. I don't know. Fiscal, what are your thoughts on Joseph Carlson selling out of VICI now after it went down? It literally went down.
So it went down. It went down, and so he sold it, huh?
Yeah.
Bold strategy, Joseph. Bold strategy.
Aria, what are your thoughts after Fiscal?
Well, the thing about VICI is like I don't follow it all that closely. I know it's kind of like a fan favorite and everything. But yeah, it doesn't surprise me. Joseph is like a momentum trader at heart. He's not an actual long-term value investor or anything like that.
And he bought Uber.
He's a momentum trader that likes to pull up his ball trim and and pretend like it's because of the financials. That's all I have to say about that.
Yeah, well said. All right, what are your thoughts on the VICI?
I never thought it fit his portfolio. I thought it was. So he went through originally he was like a dividend investor and like kind of invested in these like Pepsi, Estee Lauder types of companies, right? Like
Target.
Sorry?
He owned Target.
Well, yeah. So I guess, yeah, he owned Target, retailers, dividend growth, that type of stuff. I thought that's one of like the last companies in his portfolio that has kind of survived the purge of like moving to the quality side, I think, and then like quality growth eventually of like, like Intuit, Chipotle.
Yeah.
Chipotle isn't necessarily a quality company. It's more growth oriented, right? So he's kind of evolved, and like VICI and the railroads, which I think he sold Union Pacific earlier this year. Right? So VICI and the railroads were kind of the remaining companies from the purge. I thought it would eventually go, and it has.
Yeah. I'm shocked. I'm shocked, but I'm not at the same time.
So it's going into what? ASML or Uber?
Probably.
Is
anything that's gone up. Anything that's just, if the stock goes up, then it's a buy.
It's just the rumors are here.
Yeah.
Guys, any closing thoughts on Uber? I'm here.
Well, don't be surprised if I buy.
If I do indeed buy it, you'll be one of the first people to hear about it.
But like, any questions? Like, I'm genuinely, I feel like.
So I don't really I don't feel like I have that many questions. Like, I feel like I already had a pretty reasonably good grasp on what they do, and I think pretty exhaustively covered the numbers. So what else really is there? I mean, okay, all right. Here's one. I got one. What do you personally, in a perfect world, think that they should do with their freight business? Spin it off, sell it, keep it, fuck, marry, kill.
Well, there goes your monetization.
Nothing to lose in the first place.
Unfortunately. I would try to spin it off to like PE or something, man. Like private equity. I would try to get it out of there.
Thank you. Because I think selling it or spinning it off, whatever it is, like I think that or spinning it off and merging it with something else. Because there's other 3PLs and stuff out there. Like, somebody would probably want their revenue. And if they could, basically like add efficiencies to it and whatever, someone else could probably make that revenue profitable, Yeah.
If it was more focused, dude, I've listened to all the earnings calls. There's not been a single mention of the freight business in years, man. Like it is forgotten.
They don't know. The thing is, it's so different from their core business because, like, unfortunately, you can't manage freight from an app without any humans involved because so many things go wrong. Mm-hmm. That's the problem with supply chain management. Like, you can't yet just like, be like, hey, all truck drivers that are on the Uber like freight app, here's a thing to pick up, and here's what we're paying for it. They're going to want to negotiate. Two, they're going to have potentially questions that aren't answered. And then if they get there and they have a problem and they can't reach a person, they're going to be like, I'm never using this fucking thing again. I personally have talked to many truck drivers, and a lot of them like absolutely hated trying to book with that because of those very reasons. But it seems like they're doing other stuff with it now other than that iteration. But I don't know. It seems very unfocused, and like they don't even know what the plan is really. So
they don't even talk about it.
Like if they said tomorrow we're spinning this off, or we're looking for an acquirer, we're shopping it around for a buyer or whatever, we got a go shop period or whatever. If they said that, I would be in with both feet immediately, no questions asked.
Yeah.
Other than that, but that's really been like the one thing holding me back, because it doesn't seem like it fits, and it seems like it doesn't really generate shareholder value, and it's like a distraction off in the corner.
They need to
So-
get one of us on the conference calls. Do a high
Maybe.
tide to
But-
get some.
But yeah, I was just curious, like if you felt like the same way I do about that one aspect of the business.
It's a diminishing part of the business.
Yeah.
Like you saw the chart, right?
Yeah.
Like,
Yeah. I think the rest of it, like the core business is what we'll call it, is doing well enough now that it eclipses it so much that it's like not worth letting that one thing prevent me from buying it. And I think the last time I looked at Uber was long enough ago that it was still dragging their overall numbers enough that I didn't like it.
Mhm.
And so now I see it as less of an obstacle, I would say.
And it's going to be less of an obstacle as time goes on because it doesn't grow, right?
Yeah, right. After the billions that they dumped into it.
Awful. I think Dividend Dude, he talked about some merits. Okay, I actually prepared a clip in advance. I think we're running a little bit too late here, so maybe we'll skip that. I'll summarize though. Uber CEO, he was asked on a podcast, which he's doing like a crazy press run at the moment, by the way. He's on a podcast like every month.
CFK. I don't know.
Make
Get
it
him
happen.
on. Make it happen.
I think Aria froze.
I think he's just taking a long grin at that great comment I just made. The Oracle has interfered.
He killed he that noise we heard earlier, it was the Oracle cutting Aria's internet. He sent his Canadian henchman.
Goons, yeah. I'm everywhere. I will talk. Well, this is our last show before Christmas. A little sad.
Yeah.
What are you doing for Christmas, Fiscal? What's the plans?
Well, I'm gonna fly out on Christmas Day.
Oh boy.
Gonna go hang out with my dad, and I think only one of my sisters is gonna be there on the day of, but the other one will probably show up maybe the next day or the day after. I don't know. I'll be there for like a few days and then I'll come back, usual stuff.
Fiscal, what's the best Christmas gift you could possibly get somebody?
The best Christmas gift you could possibly get somebody? A CFK channel membership, obviously.
Only $2 a month. Happens to be one of the most affordable Christmas presents as well. These days.
Not only is it the most affordable, it's also the best quality and highest value.
As well.
You basically
100%.
cannot lose.
Access to episode 32, the episode that nearly got me killed. Fun times. Seymour Duck is working overtime on his new midnight shift. I didn't know the casinos go. I didn't know casinos open on Christmas.
Good luck. Good luck with your midnight
gambler.
shift. Hopefully that time and a half is worth it.
Have fun. Yeah. We'll go over some comments from earlier that we weren't able to get to.
Stabulo. Yeah. Well, I use a particular method of investing. So I'm probably, after I buy Uber, it's probably when it starts to go down.
Yeah.
I only buy cigar butts, guys.
Yeah. Stabulo knows what happened with the anti-Buffett situation. He was the op. He was the one that wasn't welcoming.
Damn it, Stabulo. You've got to stop criticizing. Actually,
quotations.
I bet he's the reason Leaf left as well, because Stabulo's been like trash talking MPW lately. So the cult is unhappy.
Did Stabulo sell?
Stabulo's been out of MPW a long time.
Okay, that's what I thought.
I mean, my picks this year have all
it's surprisingly good. Not my Fiscal.
But like stuff that I had from previous years, like especially anything I bought in 2022 didn't do well. So I have more than made up for that now at this point, luckily, because I've, I guess, gotten a little bit better at this. Now we just have to hope MPW turns around, and then they'll be in great shape.
Strongman bashing SHG, very foolish. Yeah, what a stupid guy. He's a fucking clown, dude. Unbelievable. He doesn't know what real man's investing is. Double D's. He likes Elv. I don't know.
Mondelez. Yeah, I mean Mondelez might be good. They've got a lot of good brands. Oh, Aria's back. He unfroze. He banished the Oracle. Back with a.
They tried to stop me.
So, he was, but you were saying about robo taxis right before you got frozen. Yeah.
Okay. Yeah, forget what happened. Anyways, the CEO been on a press run talking about robo taxis, right? And he gets asked on a podcast. He's like, okay, so like, is this not like an existential crisis? Like, wouldn't Waymo or robo taxi or whoever just come essentially undercut you, disrupt you the same way you disrupted taxis? Very fair argument, right? Like, yeah, what if that does happen? Obviously, if you're not paying the driver, then that cuts out God knows how much of the entire gross booking number. All of a sudden, there's a big profit pool that, like, cheap prices should naturally drive consumers, right? Totally makes sense. Couple issues with that. Number one, even let's just say they solve the technology side of it tomorrow, which eventually they'll probably figure out the technology side of it between Tesla and Waymo. Possible, right? It's not going to happen tomorrow. It's going to happen in the next 5 to 10 years. But still, right? Let's just say they figure that out tomorrow. The issue is you're not solving for, it's a two-sided equation. It's not just the technology that doesn't exist today. It's also the demand side of it. Uber has 160 million people that go onto their app every single month, and they either Uber Eats or the core rides, and they select a ride or they select food delivery, right? That's it. So even if they were to solve the technology tomorrow, you don't have 160 million people to all of a sudden start selling to. Issue number two, it's scale constraint. So the great thing about Uber is, and it's been pitched that way since day one when Travis Kalanick founded the company, is it's capital light. It's not like your traditional taxi cab business where you personally have to put the upfront investment of buying the car. It's other people. They buy their own car. They simply tap into the network. Boom, there's demand on one side. Boom, you're solving for supply on the other side, right? So it's this push and pull of like it's the chicken and the egg problem, right? Mm-hmm. And so that's the issue there. And then on top of that, there's reports which take it with a grain of salt. It's third party data of the Waymo rides currently in San Francisco. They cost 11% more and like 45% longer wait time. So like the argument of like it's going to be cheaper, it actually falls through. You know what I mean? Mm-hmm. And it's still unprofitable.
Yeah. And there's like I think there is also like they have to overcome that, because an Uber driver generally, like, they come to the job with their own car, and you have this capex of like building all the damn robotaxi. Like, that's an enormous hurdle, I think. Yeah. I don't think it's, again, that's not going to happen overnight. And right. Even if they solve the technology in the next 3 to 5 years, it's going to take a very long time for them to build out the actual product, the taxis themselves. And then you have the logistics of like maintaining them after the fact.
Who's going to clean them?
Yeah, there's so many like things to figure out with it that people have that are just seeing that, oh, there's like Waymo has things that work. It's like, okay, but in like 2 cities, and it's not like they haven't solved it. They haven't solved the at scale like issues that come along with it yet at all. Not
it's like 900 cars.
Yeah, like this. Yeah, this is a long way off from actually being a real threat to Uber, I would think. And then they're also because people bring this stuff up to me also with like, oh, they're coming for Grab too. And it's like, bro, we're a long way off from robo taxis from Waymo, like functioning in Manila. Okay. Like go there, and then tell me that you think a robo taxi is going to work in that environment. It will not. I promise you it will not. In a fucking typhoon, no. Absolutely not. Well, I'm sorry.
Yeah. Google said they're coming for PayPal.
Oh, it's just Stabulo being Stabulo. Yeah. And Paul brings up a good point. British American Tobacco, when they trade, they think they were under 30 at one point in the last year. Yeah, pretty amazing. I love my BTI stock.
Yeah. Well, we ran for an hour 47. Aria, where can the people find you? What are you doing this Christmas, Aria? What are the plans? You're going to Tim Hortons every morning, I'm sure. Getting a nice double-double.
I haven't been to Tim's in a while. I don't like that place. I've just seen a bunch of family. That's about it. Not really doing much.
Good fun.
Yeah.
Aria, where can the people find you? We have your
Yes,
link.
I have a YouTube channel where I kind of go in depth, just like I have. I'm actually planning. This kind of serves as like a precursor to what I'll eventually do, but planning on doing a 3-part YouTube series, hour long each, on the 3 components I just described to you with Uber. But I just really want to lay it out, polish it up nicely, nice edits, all that type of stuff. So
no 3 stocks to buy though.
I try not to do those often. Not exactly.
I will be watching.
That much value. So I have that. I have the Twitter page. Ryan's plugging the Linktree.
Everywhere.
I think it's in the description. It's in the chat, so you guys can find me there. Check out Finchat, because big thanks to them. None of this would be possible without Finchat.
Yeah. Aria would be homeless without Finchat right now, everybody. That's true. He'd be on the streets of Toronto begging for cash outside of a
CFK
pizza
sponsorship coming soon.
Yeah. If not, bad things will happen. All right. Thank you all for watching. Have a good Christmas, everybody. Smash like when subscribe. Do dividend stocks.drugs. Next week, it is our quote of the year show. So be there. And cash flow is king. Oh, yeah.